Hello, ladies and gentlemen. Good day and welcome to the show. Welcome to this Monday, the 15th of August, 2022. Thank you for tuning in. Now, I want to get right started right away and I want to open up the charts right here. Take a look. First thing I want to talk about is Jackson Hole meetings coming up. And down the markets, we've had a downturn today. It started. A downturn in the markets. The bear market rally we had going on, it might have just ended today. But anyway, it says the U.S. Federal Reserve plans to unwind its bond-bloated balance sheet. It's taken a backseat to the dramatic interest rate hikes in recent months. So people are not talking about the QT so much. What they're talking about is these interest rate hikes we've been having. But they're going to go back and they're going to talk about QT at Jackson Hole. Chairman Powell, and they're getting ready to go to this Jackson Hole symposium that's coming up very soon. It says there's probably not much more guidance Fed Chief Jerome Powell can give markets on the policy rate outlook at the annual central bank get-together in the Wyoming resort later this month. Not least because the Fed itself admits there's little long-term visibility on inflation or the economy right now. The Fed's stance on rates seems fairly clear. It'll continue to lift rates even into restrictive territory and hold them there until it sees inflation and inflation expectations are on a sustainable path down toward its 2% target. It says, but anything Powell says about quantitative tightening and reducing the bank's nearly $9 trillion balance sheet will grab a lot of attention. I guess it will. And the reason why is because they've got a really aggressive plan outlined on this quantitative tightening. And basically, this is the money that they've used to prop up the system. They plan on trying to take it away, And what this could cause, and, because markets front-run things, what this could cause, this aggressive campaign that the Fed's on right now, it could cause a sudden credit, a short side, like a liquidity, very quick drying up of liquidity within the system, and create a gap. It's sort of like when I was a kid, there used to be big puddles and stuff, in the wintertime. And you used to get, water used to freeze over top of them. And underneath the ice might be an inch thick, but underneath the ice, there's water there. And sometimes what would happen is a puddle would drain out because it wouldn't rain for a few days. And an area of that water would drain out from underneath the ice, leaving a gap. Well, the ice was there to hold things up, but there was a gap underneath there. And that's kind of what they're doing with the money. Money being like water and liquidity, and they're kind of draining it out from underneath the system. It can create a gap, and you don't notice that until suddenly, boom, you get a collapse. Something like what happened in 2008, except very similar, almost identical to what happened in 2008. It can happen very suddenly within the financial system. Then they have to come in and fill that gap over. And there's only one tool they have. That's money creation. So, it says, Powell says quantitative tightening and reducing the bank's nearly $9 trillion balance sheet will grab a lot of attention, in part because investors and policymakers have been so vague to date on how they view the impact of such liquidity withdrawal, along with the aggressive rate hike campaign. It says quantitative tightening, the reverse. Well, I'm telling you what it is right now. It's a reversal of quantitative easing. So they were doing quantitative easing all this long time now. And all of a sudden they're going to do the opposite. They're switching gears. See? It says, it will see the Fed's reduction of its treasuries and mortgage-backed securities holdings. The program started in June, and they're going to ramp it up to 95 billion a month by September. Well, that's huge. So starting next month, they're going to be at $95 billion a month of tightening against the system. You know, the system's still rolling. I mean, I was in the shopping mall the other day, and there's still quite a bit of commerce going on right now. But you know how quick that could come to a halt if we have a huge problem within the financial system? And the wealth effect just goes bye-bye like it did in 2008? It says, under these assumptions, the balance sheet will shrink by some $2.2 trillion by the end of 2024. I just don't see that happening. I'm sorry, but they're not going to get that far with this. The system right now, you just can't build a system up on credit and then withdraw that credit away and expect the system to maintain that same height or altitude. It's like a guy climbs a stepladder, you know. You can't expect him to stay up in the stepladder if you pull the stepladder away. He's going to fall. Well, that's the way with the system. But they do have a solution. Is do the same thing they did before. They're just playing a silly game, you know. Bring the system down and then prop it back up again, then bring it down and prop it back up again. But what this does is an awful lot of people get hurt within the system when this happens. Instead of maintaining a stable system and just saying, okay, what we'll do is we'll keep everything stable instead of creating these massive... This is all the Fed's doing now. They're trying to fight something that's impossible to fight because they've created a Ponzi scheme that if we look back 100 years, we can see that the dollar's lost 98% of its value until now. And it's going to continue. But they're trying to create this, they're creating this effect of like ripples in the water, you know, they're creating a turbulence. But if you look at the overall picture, the dollar's still losing value and it'll continue until it goes to zero, ultimately. Well, you just have to, if you're, say, over 30 years old right now, and you look back, you remember when things were cheaper, when you were younger. Maybe when you're 10 years old, 20 years ago, things were a lot cheaper. Now they're more expensive, and they're going to continue to get more expensive into the future. No matter what the Fed does. And all they're doing is creating this turbulence within the financial system that hurts an awful lot of people, that destroys the middle class. They're a useless, absolutely useless institution. Let's take a look at silver today. 73 cents down. Now see, this is part of the turbulence. That's why silver price is dropping today. Let's take a look at gold. Gold is down $26.60 at $17.77. Let's take a look at cryptocurrency today. Now, crypto has been doing good all day. Amazingly good in this turbulence that we're having today in the markets. Crypto is held up at 1,147 billions, which is 1,147 billion. And we're seeing the Bitcoin price at $24,064 and an Ethereum price at $1,895. So crypto's doing good, better than most things right today at first. But I don't know. These markets continue to turn downwards. The Dow Jones is 33,523. It's down 195 points. There is concerns coming out of China today. The Chinese economy is slowing drastically down. I think they got bigger problems than that even, you know. And this is reflecting on the Dow somewhat today. Let's take a look and refresh the page. 141 points, so it's bouncing a little bit. Take a look at crude oil. Now this is a big move for crude oil. 5.24%, $87.26. It's down $4.83. Now that's a big drop for crude. Okay, the MOVE index, and we've had a big drop in the MOVE index too. In fact, it's dropped below its trend line now, quite seriously. This is something I didn't expect for the MOVE index to drop this low. that indicates stability, which to me just seems kind of like it should be up higher right now in my mind, because I don't think there shouldn't be tremendous stability in the credit markets right now. Bonds and rates, we're seeing a drop in yields. U.S. 10-year at 2.76. It's down 8.6 basis points, and the U.S. 30-year at 3.05, down 6.3 basis points. And we're going to finish off here with the U.S. dollar index, which is at 106.65. It was going up this morning, now it's leveled off. Thank you guys for listening to my show this morning. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.